Hello, everyone. Welcome to Right at Home 2021 Virtual Forum, Reimagining the Future of Manufactured Housing. We're going to get started in a minute to give everyone some time to join us today, and use this time to grab some water, tea, coffee, maybe a snack, and settle in so you can spend the next 90 minutes with us. Hello and welcome again to Right at Home 2021 Virtual Forum, Reimagining the Future of Manufactured Housing. Before we get started with this webinar, I just want to go through a few housekeeping items. This webinar will be recorded and will be made available to registrants within a week after this call. All webinar attendees are muted to ensure sound quality, but you can ask a question or share your thoughts anytime by typing into the text box of your GoToWebinar control panel. If you experience any technical issues, email gotomeeting@prosperitynow.org. You can also be unmuted during this webinar to share your questions or thoughts verbally. So set your audio option to phone call, use the dial-in number, and enter your audio PIN. The dial-in number, access code, and audio PIN are in the audio table of your control panel. If the control panel is closed, click on the arrow icon to expand your view. And to be unmuted by an organizer and join the conversation, click the raise hand icon and we will unmute you. With that, I'm going to turn it over to Pam Agava.
Thank you, Dara. We want to thank you all for joining us for the Prosperity Now I'm Home Network Virtual Forum, Right at Home. Just in case you've missed any of our other sessions, our first session was yesterday at 1 p.m. Eastern, ensuring manufactured housing stability post-pandemic, where we discussed resident homeowner stability in manufactured housing communities. On yesterday at 3 p.m., we had Duty to Serve, examining federal, state, and local policy to support manufactured housing. Earlier this afternoon, we had Building a More Resilient Manufactured Housing Industry, and you are now at our final session, Reimagining the Future of Manufactured Housing. As Dara mentioned, all of the sessions will be available in the next week or so on the Prosperity Now website. But right now, we want to give a big thank you to our sponsors, NeighborWorks America and Wells Fargo, for their support in helping us put on the virtual forum, as well to the speakers and panelists of all of the sessions for the Right at Home virtual forum. With that, I'm going to introduce our speakers for today's session. First up, we have Paul Bradley, who's the Executive Director of ROC USA, followed by Damon Allen, Senior Vice President of Housing and Community Investment at the Federal Home Loan Bank of Cincinnati, as well as Chelsea Cato, Senior Program Analyst at Oregon Housing and Community Services. And last but not least, Jenny Ortiz, VP of Design and Development at NPHS. With that, I'm going to hand it over to our first speaker, Paul Bradley.
Good afternoon, everyone. Thank you very much for joining us. And thank you, Prosperity Now, as well as sponsors, NeighborWorks America and Wells Fargo, for hosting and sponsoring this really important virtual conversation and meeting. So, asked to speak today on the future of manufactured housing, which I think sits squarely in three really important trends that we've seen really attract tremendous attention and become trends in the last 18 months during the pandemic. The first of which is the affordable housing crisis. And for those people who've been in this sector for a long time, we recognize manufactured housing hasn't always been front and center when past affordable crises have presented themselves to the general public. But I think that's changed, and I think that is the future for manufactured housing, now being looked to as an affordable source of affordable housing from a production standpoint. The Ford Foundation first began investing in this sector, and in fact helped found Rock USA as well as the Home Initiative, out of an interest in part in lowering the cost of production of affordable housing. And George McCarthy's theory at the time was eventually housing production cost would rise so much and subsidy pots would not expand to meet the need, that eventually people would look at factory built housing, modular and manufactured and other types, to lower the cost of production. I think that stands a much greater chance today than it ever has. And I'm really excited. I think the manufacturers have stepped up, and I think more and more developers are seeing the opportunities here. So that's great. Two, I think the stresses in the manufactured housing community sector have become widely known and are beginning to be addressed in a variety of ways. I think the community sector in particular is an area where much more attention needs to be paid to security, economic security, security of tenure and ownership, and I think it's getting that attention. And in the rush to understand the dynamic in this sector, it's really important to understand, I think, that there are many good community operators and owners who've owned these properties and provided secure, affordable housing. But what's now recognized, and I think is going to be with us for some time, is the tremendous disruption that occurs when some owners take over and really ratchet up prices, right? Lot rents and pass-through fees. And you're beginning to see some creative approaches to addressing that, not the least of which is within the duty to serve plans and the FHFA requirements for the treatment of affordable housing by the GSEs. Last, I think significant in this period and therefore influencing the future, certainly something we're very focused on, have been historically, is community-driven change. How do you engage the communities that you serve in the change that you're making? Obviously, resident ownership starts with resident empowerment. And I think this is a trend that will impact all of us in the nonprofit sector and in the public sectors. And I am personally delighted to see it front and center. So I raise up those three trends in the industry as an indication of where the future of the industry sits, with a little bit of a tilt towards how we engage in this industry. For those of you new to Rock USA, Rock USA is a national nonprofit social venture. We help homeowners in manufactured home communities purchase their communities as co-ops. We do that in cooperation with 12 nonprofit affiliates, technical assistance providers that operate in 21 states. We have today within our network 281 resident-owned communities, roughly 19,000 homeowners in those communities. And we have co-ops or resident-owned communities in 18 states. With our partnership with the California Center for Cooperative Development, California is soon to become the 19th state with a Rock USA network co-op. And we've entered Missouri as well in direct support of a community And by year's end, we expect Missouri to be the 20th state with a resident-owned community in it. So just a little bit of background on Rock USA. The issues that are front and center for us as we look at the near-term future rest in some age-old issues. Within the Housing Financial Services Committee legislation, the Building Back Better bill is an infrastructure fund directed to manufactured home communities and resident-owned communities specifically. $500 million directed through CDBG for community improvements. This is something that co-op leaders in our network has been working forward towards for a long time. Obviously, a lot of those improvements are privately financed, but some conditions, and recognize this is a housing stock, or these communities in some cases are 60 and 70 years old, where the infrastructure simply needs to be replaced. And we have to come to terms with the fact that these communities will disappear if that significant investment in water and sewer and electric, roads, drainage, et cetera, are not made. So we view this as permanent housing stock occupied by low and moderate income households, and we want to secure it, but also improve it. And so these resources are critical to that, and we are greatly appreciative of the House Financial Services Committee for including that in the Building Back Better bill that currently is in both the House and the Senate. Also in the House is an acquisition fund. Representative Axney from Iowa has sponsored a piece of legislation, which we're very supportive of. The previous panel dealt with duty to serve, and I'll just make one comment about that relative to the future of manufactured housing, and that is a lot of attention paid to the GSE's role in the sector and in supporting resident-owned communities specifically. I want to point the finger directly at the FHFA, the Federal Housing Finance Authority, because my view is that the GSEs, Fannie and Freddie, have teams that are highly dedicated. I think you heard yesterday Corey from Freddie Mac talk about their interest in financing more resident-owned communities. But the fact is their hands are tied. They need some relief from the FHFA in order to really lean into this market and support homeowners and resident ownership in the way that the staff and leadership at the GSEs really want to. And I am hopeful that the FHFA is listening to that and will respond and provide some relief to the GSEs. For us at Rock USA, in terms of our future, and work with our network and with our own team, we have reevaluated and are taking a new approach to market expansion. I said we will have co-ops in 20 states here shortly. We're going to begin providing services in all continental US states. So national services coast to coast through both our affiliate model as well as a Rock Direct model, because we recognize and have heard from many community owners and homeowners over the years that they want us in more places, and we simply need to be more agile. So we're excited, along with our network, to really expand into all states when the opportunity arises within any of the states that we currently don't have a co-op in. That's how we arrived in Missouri, a longtime community owner who met us some years ago and is interested in selling to the homeowners before selling out to a large consolidator. And we simply did not want that property to be sold with the homeowners not having an opportunity. We went there, and the homeowners are delighted with the chance to gain security of the land. They're paying attention to what's going on in this business now, and to be there with those support services and those development services and financing will mean everything to them, and it's very satisfying to be able to arrive there quickly. Along with our really expansion into new markets comes a serious focus on building financing opportunities in states and regions around the country. Some of the best financing that our CDFI, Rock USA Capital, is able to deliver is in partnership with state agencies, state housing finance authorities, and even some foundations in some states, as well as regional banks. And so we're going to take a much more deliberate approach to going out and building state-based and regional funds to support resident ownership and really help confront some of the very high prices that are being paid for communities and that homeowners are having to match in order to purchase their communities. And last, our outlook is this: the best advocates for manufactured home communities and for resident ownership are the homeowners themselves. We have a bastion of co-op leaders that are eager to speak, to lead, to engage in public policy, to network with their peers across the country, and really build out the ROC movement. And so with that, we are stepping up and providing much more support, executive level support, to help the ROC Association, which is the association of the communities we serve, and all the many leaders who want to step up, not just in serving their local community, but now serving co-ops in their state and even serving co-ops nationally. And that self-representation takes us right back to one of the three key trends I spoke about up front, which is community-driven change. We're focused on community-driven change at the local level, co-ops buying their communities and empowered to do so with technical assistance and financing, but also community-driven change at the state level through resident voice and resident leadership, and at the national level through those same resident voice and resident leadership. And unless you invest in that capacity and in the development, you don't get there. And we're wholly invested in raising up resident leader voice. So with that, I will leave it to some Q&A at the end, but thank you very much. And I certainly look forward to working with you into the future.
All right.
We'll transition to Damon now.
All right. Well, good afternoon. Hopefully everyone can see and hear me. My name is Damon Allen. I'm the Senior Vice President, Housing Community Investment Officer for the Federal Home Loan Bank of Cincinnati. So Paul touched on a couple of things, one of which is discussion about the GSEs. So I will tell you the Federal Home Loan Bank of Cincinnati is one of 11 federal home loan banks. We are also regulated by the Federal Housing Finance Agency. So we are also a GSE, although unlike Fannie and Freddie, we're not in conservatorship. And as a system, we have functioned how we were designed to function going back to 1932. So the first thing I want to do is tell you a little bit about the Federal Home Loan Bank system, then about our bank specifically, and then tie that into why it relates to this conference into manufactured housing. So as I said, we're one of 11 federal home loan banks established in 1932. Our main role is to provide liquidity for housing finance. So I always tell people we are a banker's bank. So all of you with mortgages have probably gone to a financial institution. That institution has probably borrowed from a federal home loan bank in order to fund your mortgage. So this system of 11 federal home loan banks consists of roughly 7,000 financial institutions. And by that specifically, I mean banks, thrifts, insurance companies, credit unions, and both depository and non-depository CDFIs. So it's a vast network. But also what's important and relates to this conference is by statute, all 11 federal home loan banks have to set aside 10% of their annual earnings and provide that money, or use that money rather, to fund discounted loans or grants for the development of affordable housing. So to give you some perspective, since that statute was enacted in 1990, the 11 federal home loan banks have provided roughly $6.4 billion with a B dollars for the development of affordable housing. So the Federal Home Loan Bank of Cincinnati, whom I have the pleasure of working for, in our history, we've provided $800 million on behalf of 100,000 units of affordable housing. So think of the Federal Home Loan Bank system as this great organization, system, network that brings financing to the table when it comes to affordable housing. Now for Cincinnati, where manufactured housing fits in, is all 11 banks have an advisory council, and I've had the great privilege of working with Stacy Epperson at Next Step Network for probably the better part of a decade, and she served on our advisory council twice. And she's really educated me on manufactured housing, and as Paul alluded to, how that is a great way to meet the lack of affordable housing. And something that we're actually thinking about looking at also is how that's a great vehicle or tool to address the shortage of affordable housing, particularly in urban areas where the land is where they have less land to expand. So that's why it's important to us. And so our flagship program, the Affordable Housing Program that I mentioned earlier, that's provided approximately $800 million, allows the use of manufactured housing and modular housing. So we view that as financially viable housing for our program. Now, I can't attest to all 11 federal home loan banks, but at least in Cincinnati, we specifically state that manufactured modular housing is eligible. So what that means is for developers who want to use manufactured housing, you can come into our affordable housing program, and it's a competitive grant program, but if you're successful, you can get up to $50,000 for the acquisition, for down payment, closing costs associated with manufactured housing. So that's where we come in. We're a resource for that. But in addition to that, we also participate in conferences such as this one, and also some national initiatives, and one of which is the Mortgage Bankers Association has an initiative called, actually two, Convergence Memphis and Convergence Columbus. And in that role, I participate in those meetings and attend their conferences as well. And I advocate for the use of manufactured housing and pairing the need for affordable housing with the availability of manufactured housing that can be achieved through the financing available through the Affordable Housing Program, whether it's the Cincinnati Bank or one of our sister banks. So, and I also should point out that all 11 federal home loan banks have regional footprints. So for us, that's Kentucky, Ohio, and Tennessee. But our funds can be used in any U.S. state or territory, so you're not limited in that regard. So our AHP is a competitive application. All 11 banks have one round per year, and there's a lot of detail, too much to go into here. But I will tell you, for me and the Federal Home Loan Bank of Cincinnati, manufactured housing is important. Part of our district, particularly in Kentucky, Eastern Kentucky and Eastern Tennessee, consist of several Appalachian areas. And in those areas, mobile homes are prevalent. And so some of the things that we are working on and looking to in the future is how to leverage our AHP more to use manufactured and modular housing to replace and transition households that reside in mobile homes into manufactured, modular, or even site-built affordable housing. So that's something that we've allowed over the last 10 years or so, but we're looking in the future to make a more concerted effort in that regard. So, and then lastly, I know we'll have a Q&A at the end, and I'm happy to answer questions and talk a little more about the AHP. But again, really our role is as a financier to provide that financing and that liquidity, and also to be an advocate in the space that we can, whether that's meetings with members of Congress or conferences, et cetera. But the other thing I want to note, and this may be a little bit of preaching to the choir, you know, is that words are important. So one of the things that I found helpful, as Paul mentioned, that community engagement and kind of getting around NIMBYism and all of those issues, is making sure that I'm very specific with people who are outside of this space. So most of you all are experts, you understand the nuances, but I would encourage people to the extent you can when you're meeting with folks or talking with people, in my case, talking with our advisory council or our board of directors, I'm very specific about the terms that I use because there is a stigma around manufactured housing by people outside of the industry who group the work you all are doing. They group it in, they say, oh, that's mobile homes. So I make sure I correct those folks. I make sure I explain the difference to them. And I also talk about the benefits. So not just in the communities such as Rocky USA's communities, but also the one-offs when someone purchases a manufactured or modular home and moves into it. I sit down and I explain to people that mobile home is financed with chattel. For our AHP program, all the manufactured housing units that we assist with, they're taxed entitled as real estate. They have the benefits of wealth creation. They have the benefits of lower financing costs. Freddie Mac did a study a few years back where they found that the people that we serve in rural Appalachia living in mobile homes with chattel loans are paying 5 times the rate they could have gotten on a mortgage. So I do think words matter. So take the opportunity to also educate those who may not be as well versed, and don't let them dismiss the work that you all are doing and the work that I hope the Federal Home Loan Bank of Cincinnati will be more involved in the future and support you. So with that, I think there's going to be Q&A here at the end of my section. So Pam or whoever's running the show, I'm happy to take questions and engage.
Thank you, Damon. At this time, if you have any questions, drop them into the chat. You can also raise your hand and Derek or I will unmute you so that you could ask your question live. And while we wait for some questions to come in, just a general question being posed to both Paul and Damon. In terms of, thinking about reimagining the future, specifically when we think about outreach to, in terms of financing for rural areas, but also in terms of race equity to specific populations, Latino populations, rural Black populations. Are there any thoughts around specific things that we could be doing to increase financing options for those populations?
So I'm happy to chime in on that. So that's a great question. So when I mentioned, for example, the Convergence Columbus and Convergence Memphis, they are directly addressing that issue. And some of the biggest hurdles that we found with serving Black and brown communities is most of the folks are not aware of their ability to qualify for a mortgage. They're not aware of the things, the tools that are available. They may not understand the mortgage process. So one of the initiatives, and there's another term they use, I don't know if it's one of the strategic initiatives or whatever the term that they use is, but they have a whole branch dedicated just to educating those households, Black and brown households, about the tools available, about how a mortgage is not outside of their reach, about avoiding predatory lending, about credit worthiness, about household budgeting, etc. But one of the other key components I like about the Convergence Initiative, and also JP Morgan is involved and they have several initiatives, and I think Wells Fargo and PNC Bank also have some initiatives around racial equity. But the thing I emphasize to folks is, you're in a city like Nashville, where the cost of site-built housing is rising. Well, manufactured modular housing is a very reasonable solution. And when you look at these homes, you can't tell oftentimes that they are factory or manufactured, that they are modular or manufactured homes. And case in point, a gentleman I work with, I was looking over his shoulder at his screen. I said, oh man, that's a pretty house down in Florida. And he said, oh, that's my parents' house, and it's a modular home. I thought, man, that's great. That palm trees, everything. So there are some initiatives, but I think the number one barrier is educating those communities about the tools available and also the responsibility. So you come out of college, you don't need to go buy, a brand new BMW. If you wait 2 years and just save your money, you can come up with a down payment, a reasonable down payment, and pair it with some of the other down payment resources available and get into a reasonable mortgage.
That's great, David. Land ownership has a very significant and historical and special role in racial justice in the U.S. And we're happy to be delivering land ownership in mixed race communities across the country. 20% of the communities we've served in the last decade are either entirely or partially Spanish-speaking neighborhoods, and it's a growing part of the portfolio. Also exciting to us is the opportunity through the new National Service Plan to begin to work with communities of color in states that we haven't served by even more reaching out and doing affirmative outreach in communities of color. So we're super excited about that. And then in those communities, as Damon's touching on the single family finance, we draw on existing local lenders by and large, and the Community Development Credit Union and the credit union field have been very responsive to financing homes and co-ops. And we're certainly in those new markets, doing that outreach and trying to attract those local lenders to the housing finance challenge, which is step 2. Land ownership, security, step 1, access to decent housing finance, step 2. But we feel like we have in our new service plan much more ability to target and support communities of color, and we're excited about it.
Awesome. We have a couple of more questions from the audience. How are you engaging with manufactured homeowners to identify and define the priorities for your work within manufactured housing? I think both of you touched on this, but maybe you can expound some more.
So the Federal Home Loan Bank of Cincinnati, we don't go directly to households. So what typically happens is if a household receives our grants, they're working with one of our member financial institutions and then what we call a sponsor organization. These are typically, but not always, nonprofit organizations. So the way the program we're thinking about in the future, the way it would work is those organizations, those sponsors will be the ones that will be connecting in the community. They have the relationships, they have the trust, particularly one of our goals is to serve Appalachia. So those organizations such as FAHI, Frontier Housing, the state housing finance agencies, et cetera, that really, for our programs to be successful, have to be engaged with the individual households directly to access our funds. Otherwise, I show up in a suit and people hear federal and, they think, what are they here for? So we really rely on our sponsors to make that connection with the households.
That's great. That's great. We engage the communities we serve very directly on a daily basis in terms of the work, because they're actual owners of their communities, so they're directly in control of their ownership, their community. It's on a democratic basis. In terms of how we engage co-op leaders in ROC USA, we do that formally because the ROC Association is a formal association. The co-ops we serve elect 3 directors to the ROC Association board, and those 3 electors serve on the ROC USA board. There are 3 of my bosses that are elected by the communities we serve, and that's vitally important in terms of the consumer feedback, if you will, but really co-op leaders at the table, full transparency on all matters other than some personnel matters, as you would expect. That feature of ROC USA is enhanced further by our strategic planning process, which includes engaging about 100 co-op leaders that participate in the annual ROC Leadership Institute. Every 3 years, we keep them an extra day, and the board of directors comes in and we do a full day of strategic planning with the co-op leaders that attend the Institute, our technical assistance affiliates, our own team, and the board of directors. And it's one of the signature events in all of Rock USA to see national leaders that serve on our board facilitating small groups of co-op leaders about the direction of this social venture. It's incredibly powerful. All of that was covered by Transform Finance's report about, I don't know, 6 months ago or so, I guess April, grassroots community engaged investment. And they really looked at nonprofit strategies that engage community. And Rock USA was cited as one of the, as the national example of how you engage grassroots community leaders in the governance and strategy development of a national organization. And really thankful for Transform Finance for naming us and writing a report to include us. So that's the ways we bring community-driven change into our governance and strategy at a national level.
Thank you both. We have a couple more questions. Could rebates be offered on chattel loans for those who make their loan payments on time as a way to overcome the higher interest rates?
So Paul, I'll probably have to punt to you on that one, because the Federal Home Loan Banks, we don't do the direct lending, and we don't do anything with chattel. So
yeah, and I don't know the regulatory issues, if there are any involved in that. It's a good question. I love incentives. I do know from having engaged with corporate counsel at Clayton Homes that 21st Mortgage, a private chattel lender, actually has, I believe the figure was $6 million of chattel relief to its borrowers during the pandemic. So there are a variety of things both for-profit and nonprofit lenders are doing. And we all stepped up during the pandemic, I think, in impressive ways. And that was just one example in the chattel space. I don't know whether incentives can be applied in that way, but it's a good question. And I would think it could be.
You know, I wouldn't be remiss, as you were talking about, I was thinking about something. The one thing I know for sure the Federal Home Loan Banks could do, it wouldn't be a rebate, but through our members, we could always help folks refinance, but it would be on an individual basis, and it would be still subject to our members' credit standards. So it wouldn't be the same as a rebate, but I do think for those of you out there, if you touch base with your local Federal Home Loan Bank, there might be some opportunities or alternatives to look at. And it's certainly worth having a conversation about. And it could be on an individual basis or on a cumulative basis. So, you know, a dozen, 2 dozen homeowners.
Awesome, thank you. And one last question. Damon, is there any public-facing information about the Convergence Initiative that we can reference in the chat for anyone who's interested in learning more?
Yeah, so there is. So I won't remember the website exactly, but I'm sure if you just Google Convergence, or if you actually, it's probably better just go to the Mortgage Bankers Association's website, and there should be a link on there, because I've been there and I've seen it, or you can Google the term Convergence Memphis or Convergence Columbus. And then, of course, after this, Pam or whomever can reach out to me, and I can actually put you in contact, and you can share the contact info with everyone here of the gentleman who's spearheading the initiative. So.
Awesome, thank you for that. And with that, we will move on to our next speaker. We'll be having Chelsea up first.
Thanks, Pam. I just want to give a special shout out to whoever found that older photo. I appreciate it. As you can see now, I need glasses to see the screen, so it's a little bit old. So thanks for having me. My name's Chelsea Caddo. I'm the Senior Program Analyst at Oregon Housing and Community Services. OHCS is the state housing finance agency in Oregon. As I'm sure in many other states, manufactured housing is one of the largest affordable sources of housing, particularly for home ownership. And we've been supporting manufactured housing in various ways for probably close to 15 years, if not more. As many of you know, manufactured housing in some cases is really a hybrid of multifamily housing and home ownership. So our support for manufactured housing and our programs live in various places across our agency. We do financing, we provide financing for the purchase of manufactured housing communities by nonprofits and resident-owned cooperatives. We also oversee, we have a community resource center that oversees the annual park registration, continuing education requirements, and the provision of mediation referrals for residents and owners in investor-owned parks. In Oregon, we have over 140,000 manufactured homes that are spread across close to 1,100 manufactured housing parks and also on private land. And I wanted to remember to do a shout out to Damon for just his comment about language being important and how we use it and how important it is to make sure that we are using consistent language to help destigmatize this affordable housing stock and really important housing stock. So let's see, since 2005 in Oregon, we have preserved, well, our partners have preserved 30 manufactured housing parks, 10 nonprofit owned, and 20 resident owned cooperatives. And between those two, that represents about 1,950 spaces. And if we can go to the next slide, please. So since 2008, potentially before, that was before I was with the agency, we've provided $35.5 million in permanent funding for park purchases by nonprofits and resident-owned co-ops. That ranges from pre-dev loans to grants. Most of that funding is through grants to help offset the cost of purchase for the nonprofits and the residents. We provided nearly $7 million in bridge financing. That's one of our newer programs, and I'll talk about that more on the next slide. And then we've provided nearly $30 million in Oregon affordable housing tax credits. Those allow a buy down of the interest rate for the primary loan by 4%. So it really goes a long way to helping make the purchase of a park by residents or nonprofits much more affordable, which then in turn means that rents can stay stable or remain where they are. And the next slide, please. So the 2019 legislative session was a really exciting one for us. Thanks to the advocacy of community partners and state legislators, we received dedicated funding. So this is funding that was specifically carved out through the state legislature to develop 2 new programs. And the first is, and I know some folks asked the previous speakers about chattel financing. The first is a manufactured home replacement program. So that consists of, we received just over $2 million, and that program consists of decommissioning and disposal grants for older manufactured homes, and then subordinate replacement loans that are forgivable loans for manufactured homeowners looking to replace their homes. The intent of this program was or is to help manufactured homeowners who are qualified for this program replace older, maybe energy inefficient homes with new energy efficient homes. This funding is intended to be used really as one tool in a larger toolbox to help bring some subsidy into the cost of replacement to help bring down that cost to manufactured homeowners. It has, let's see, so for the decommissioning grants, we provide 100% of the cost of decommissioning and disposal, up to $15,000. And then for the subordinate loan, it's forgivable over 10 years. it's intended to be used, as I mentioned, with other financing resources. So we've been working in partnership with a number of organizations, the Energy Trust of Oregon that has energy efficiency incentives for manufactured homeowners that are in their service territory. There are some weatherization funds that are available in Oregon. Different community action agencies have kind of modified the use of those weatherization funds so that manufactured homeowners can actually use that money towards the replacement rather than just repair of an older home. And then we're partnering with Craft 3, which is a community development financial institution. They've created a special manufactured home loan chattel product to help qualified manufactured homeowners cover that primary loan. And then the state OHCS comes in to fill that gap. Right now, those loans are for a single wide up to $35,000 and for a double wide up to $45,000. We're actually looking at increasing those max caps right now. As I mentioned, the loan is forgivable over 10 years. So if you stay in the home for 10 years, it gets forgiven. There is zero interest and no principal payments. So it really functions as a soft second and really a subsidy as long as you remain in the home for 10 years. Right now, the statute requires that participants are either in a nonprofit owned, housing authority owned, or a resident owned co-op, or on private land. In some cases, we can make these loans to manufactured homeowners who are located in investor-owned parks, provided, because it's public funds, provided the park owner would agree to sign a regulatory agreement with the state. I would say that we've spent probably the better part of the last year working with partners to really set up the system and the process for this program. You might have attended the previous session where you heard from my fellow Oregonian, Ross, from Dev Northwest. They've been providing the housing counseling and education services for manufactured homeowners who are participating in this program. We've recognized that manufactured housing to replace it is a very complex process, and so we've really had to pull a lot of heads together to figure out how this is going to work. So it's been in constant development stage for the past year, but we've made some good progress. So as I mentioned, this funding will leverage other resources, and I look at it as kind of a toolbox. And so depending on where you're located, you might have access to the different tools to help you replace your home. And then the second program is the Manufactured Housing Park Acquisition Bridge Loan Program. That is, we've received over $9 million so that OHCS could provide loans to CDFIs, Community Development Financial Institutions, to help them develop or provide some capital for manufactured home park preservation programs that they might have. And the intent of this was, while we as an agency have some resources to help with grant funding and tax credits to help preserve manufactured housing parks through resident ownership or nonprofit ownership, knowing that the market is competitive and that our resources might not always be available when they need to be, these bridge loans offer an opportunity to be able to acquire parks quickly and allow the CDFIs who have this funding to be able to determine terms of the loan. They're really intended to be shorter term bridge loans so that when permanent financing is available, these projects can be fed out into the takeout financing, and then the bridge loan funds would be revolved back into their programs and used again. And then under that same legislation, we developed a manufactured housing advisory committee, which I think we have 17 members now from across the community, those members who have an interest in manufactured housing. And we really use them as a sounding board and some for experts, some guidance on policies and other programs that we develop. And then in 2021, this last session, we received additional funding to replenish our existing programs, the new programs that we had set up. Next slide, please. So in the midst of a pandemic and everything else that was happening as we were developing these programs, as many of you know, the West Coast and particularly Oregon was struck by the Labor Day 2020 wildfires, which disproportionately impacted manufactured housing and manufactured homeowners, particularly in Southern Oregon. But we lost, well, we had either, we had 21 manufactured housing parks that were either damaged, significantly damaged, or completely destroyed across 3 counties. Our estimates are that it affected over 1,700 manufactured homeowners, both in parks and also on their own land. So as you can imagine, this has been a very, manufactured housing itself is very complex, and added to that, trying to determine how to really support survivors in replacing their homes and the rebuilding of parks has been at the center and the forefront for the work we've been doing over the last year. So since we were recently in the 2021 legislative session, we were able to, with support from state legislators, ask for some legislative fixes to our new programs to allow those resources to be used in manufactured housing parks that were impacted by a natural disaster. So the 2 programs that I mentioned earlier, the MH replacement program and also the bridge loan program, the legislature allowed us to, they made some modifications so that we can be flexible with that funding. I'm now able to use the replacement loans to support manufactured homeowners and privately owned parks that were impacted by a natural disaster. So I can do a waiver of the regulatory agreement requirement. And I should mention that none of the preserved parks, so none of the nonprofit or resident-owned communities, were impacted by the wildfires. A few of the wildfires came close to a few of them, but all of the parks that were impacted were investor-owned. So we are able now to use that funding to help survivors who want to replace their manufactured homes access this forgivable loan, and then couple that with other resources that they might have access to, such as FEMA funds or insurance. And then we also amended the definition of manufactured housing parks to allow for the placement of modular homes. We recognize that, in the midst of a pandemic, we were already seeing a housing shortage and an inventory shortage, and the wildfires just exacerbated that situation. So we wanted to be able to be more flexible in thinking about the type of replacement housing that could go into these parks. The legislature allocated $150 million for wildfire recovery related to housing, including about $50 million for manufactured housing. And so we're right now looking at ways to use that funding. We've already used some of it to purchase some modular homes that we can bring into the state, knowing that the factories were not going to be able to keep up with the inventory needs that we're seeing. And then looking at using some of that for the replacement loans, the forgivable loans. Also looking at how we might be able to do credit enhancements. So bringing down, making chattel loans more favorable and non-predatory. So are there ways we can help lenders who are doing chattel loans for manufactured homes be a little bit more flexible in underwriting and give some loan guarantees? And then also looking at how we could use those funds to help either with acquisition of some of these parks that were burned, if there are investor owners who don't want to rebuild and are interested in selling to nonprofits or local agencies. And then also being able to use the bridge loan funds for not just a park purchase, but also for potentially land acquisition, as well as to help with the cost of infrastructure repair. And then lastly, I could probably spend, I would say, a couple hours on the challenges and the lessons learned and the key takeaways. And we are, like I said, still in the midst of recovery and rebuilding for the wildfires. So I wanted to just point out a few things that stood out to me, and I'm happy to take additional questions if folks have questions about the wildfires. But what we found is, of course, a lot of the homes that were destroyed were older. Many of the homeowners were not insured or they were underinsured. One of the first things we realized early on was a lot of people who had their ownership documents couldn't find them because they burned up, or they didn't have access to them because they had burned up in the fires. So we put together, actually driven by one of our state legislators who's a champion in manufactured housing, put together a forum specifically for manufactured homeowners to just go over some of the basics and help them think through some of the things that were just really probably too overwhelming to go through themselves. Helped guide them on to, where the state system where they could find their ownership documents that they would need to go to their insurance companies and file a claim. We found that some insurance companies were requiring them to go back into the same park or they wouldn't get as much of a insurance payout. And so we were able to have some of our state agencies help advocate on their behalf to give them some flexibility, since the parks that were burned are still rebuilding. There's a few that are coming online pretty quickly, but a lot of them are still in the early stages, and so some of them might not rebuild. We wanted people to have a choice of where they could go and where they could use their insurance money, and then also helping them kind of navigate the FEMA process. As I mentioned, we were seeing an inventory shortage, so really helping, identifying alternatives such as modular housing, and then helping people think about the complex process of the timing of when to order a home and where that home could be placed. We were seeing already during the pandemic price increases for homes. Of course, the wildfires exacerbated that and this lack of inventory. And then what we're seeing is, because many of the parks were completely burned, manufactured homeowners who are returning to their parks not only have to cover the cost of their manufactured home, but I would say many, if not all, parks are requiring them to replace and rebuild porches, awnings, carports, decks, sometimes driveways. And so that adds to the cost. We're seeing the cost of manufactured homes almost double, and then looking at potentially $35,000 plus addition to rebuild some of their site. And then really, of course, the affordable financing piece for replacements, the funding that OHCS has, again, is one small component. It's not enough to cover completely replacing a home. So we've been working with partners to find, if we can bring in these energy incentives, other lenders that could help provide some chattel loans that are more affordable for folks. And then really the most important thing was identifying housing navigation services for survivors, providing providing trauma-informed services, recognizing that many of these homeowners are very overwhelmed. They're traumatized from the experience, and taking a very complex process of manufactured home replacement and making it even more complex. And so we have supported a community action agency in Jackson County, and they have set up a Center for Community Resilience. And they're working with all types of wildfire survivors, renters, homeowners, manufactured homeowners, but we've been coordinating with them very closely to help them as they provide the navigation services for wildfire survivors. I think I'll leave it at that. There's a lot more, so I'm happy to take any questions after our next speaker. Thank you.
Thank you so much, Chelsea. We're going to transfer over to Jenny from NPHS to continue on presentations, and we'll have a Q&A immediately following after that.
Hello, thank you for having us today, Prosperity Now, and I commend all the speakers that have participated in this conference, because there's a lot of good information that's being shared. So I'm the VP of Design and Development for Neighborhood Partnership Housing Services. We are about celebrating 30 years in service. We are a NeighborWorks America organization, and we are also a CDFI, and we are located in the city of Rancho Cucamonga, beautiful Southern California. Next slide, please. So California, as everyone may be aware of, has the 6th highest median household income in the U.S. of $80,440. It's also one of the highest cost living in the country. Our target regions are Inland Empire, which is consistent of San Bernardino County and Riverside County, and these two regions comprise a population of over 4.63 million. This year alone, our real estate market has been quite on fire. According to statistics from the California Association of Realtors, in August of 2021, Inland Empire, which is both the county of San Bernardino and Riverside, have had a year-over-year price gain of 19.5%, which has increased our median home pricing to up to $520,000, compared to the state median of about $819,000. So it's interesting how, our challenge here in Southern California, in specific the region of Riverside and San Bernardino County, it's interesting in that we have to identify ways, alternate ways with manufactured housing, factory-built housing, to provide homeownership opportunities to our communities at large. And only 23% of California households could really afford to purchase a medium price home today. And we're seeing a huge influx of families moving outside of California to more affordable regions or states that are like in Texas, Arizona, and Nevada. Next slide, please. So the challenge that we've had as an organization that focuses on targeting home ownership needs of low to moderate income households is, with the cost of home prices rising and residential construction skyrocketing, how is it that we can utilize scattered infill developments, make them sustainable and scalable with factory-built housing? That's been our mission for the last, to share our story, about about 5 years now. So we're looking to grow in the area of factory-built housing, and I'll share a little bit of our developments. Next slide, please. So the opportunity for us in the Inland Empire, it's a huge area. There are thousands of scattered vacant lots, surplus lots that are left over from the redevelopment agencies are mostly blighted. They can be developed into homeownership opportunities for low to moderate income households. And factory-built housing presents an opportunity to build quality, energy efficient homes at a lower cost and at a faster completion time frame. Our average time frame is anywhere between 4 to 6 months once we get the permits. So it's not a much, drawn out process. With site build, you can definitely go over 18 months a lot of the time. Next slide, please. So in our efforts to start a factory-built housing campaign, we did partner with Next Step. And in partnering with Next Step, we started with educating our local government partners, housing agencies, elected officials on the benefits of manufactured housing. We started identifying surplus scattered lots that are primarily zoned residential. We created stronger relationships with municipal housing agencies and other collaboratives and nonprofits to achieve housing advocacy initiatives. So the power in numbers is really important in reaching factory-built housing goals in terms of identifying and structuring financing. We had to look at both public and private partnerships to help develop the construction costs, the on-site and the off-site costs of these infilled scattered lots. We obviously are a HUD certified homeownership center, and we identified down payment assistance for low-income first-time home buyers. We try to provide that as a layer of financing, knowing that a lot of our target population is in desperate need of down payment assistance, which is sometimes one of the largest barriers. We identify the type of single family product that we would like to work with. And generally speaking, we don't try to do a cookie cutter, but we are looking at, creating an efficient model that will remain scalable and have universal design features that people can age in place in. And we're seeing that between 14 and 1,500 square feet, 3-bedroom, 2 baths would service our population just fine in terms of the resale price as well. And again, we are looking to establish long-term relationships with manufacturers, retailers, in order to negotiate the pricing with the manufacturers and retailers. There are opportunities to get to know the individual specs better, understand what specs are the ones that we're working with, are MHA Advantage specs that help the end consumer come in with less than 5% down. 3% down is what we're looking for them to start with. And we also want to work with select qualified contractors to develop on-site and off-site improvements. A lot of the times it's in our market right now, contractors are hard to come by, and it's been a challenge, but we've developed good rapport with contractors. Next slide, please. So this is one of our first developments in modular development. This was one lot subdivided into 3 lots, and we were able to provide modular housing for 3 separate households at 80% AMI in the city of Chino. And this was a very successful development, and we're very proud of this first project. Next slide. So the city of San Bernardino is our infill development partner in our first and second phase. Since we are a CHOTO, we've received home dollar funds to develop both phases. The lots were transferred at no cost to develop the affordable homes. And we priced the first phase, which was about 2 years ago, between 240 to 270 as a resale fair market value of the homes. We are now currently in our second phase. These are 3 lots, and we're expecting to sell those for up to $340,000. So the market has definitely transitioned to a higher bracket in terms of the resale value. But of course, we have to look at alternative approaches to providing DPA for first-time home buyers and identifying ways to close the gap. So we are also excited. We were awarded recent dollars from CalHome to provide DPA assistance to our population. Again, our population is 80% AMI first-time home buyers, and the average household earns no more than $63,200 a year in San Bernardino. Next slide. So here are some pictures of our first development, our first phase. This, again, 3-bedroom, 2-bath within approximately 1,500 square feet. A lot of the upgrade interior features, you know, as mentioned earlier by Paul, or Damon actually, mentioned, you know, some of these homes really, you cannot tell the difference, the features, the interior, the exterior. We did our very best to make a lot of these homes aesthetically pleasing to the community. And so we had no challenges with working through these homes in terms of the resale component. We did have a lot of interested parties to try to qualify for the homes. Next slide, please. This is our second phase. We identified one model to work with, and the floor plan is being shared there. We are expecting to finish we had the groundbreaking in May. We're expecting to finish in December. Through the pandemic, it's been a process, of course, I'm sure, with a lot of developers working through city building permit processing. So we're in that stage now of, you know, remaining patient with the cities, and the short staff that has happened with a lot of the municipalities during these times has been challenging, but we're pushing through. And of course, we are looking to comply with Fannie Mae MHA factory built higher specs with these homes. Again, our goal is to be able to have the end consumer pay less in terms of a down payment. So 3% is what they're looking to come in with. The home sale price is, again, about $339,000. And again, Home Dollars, we did partner with Dignity Health, Common Spirit to provide construction financing on this phase. And this is through our health and housing collaboratives that our executives, including our president, are very heavily involved in making sure that health and housing initiatives are pushed through the Inland Empire. Next slide, please. So through this endeavor and the efforts of our team here, we decided that, you know, we've built a social enterprise. We're becoming very well known in the region as you know, looking at factory built in the bigger picture, servicing the affordable housing needs of the Southern California population that we serve. So we are developing a factory direct business model wherein we purchase the manufactured homes directly from the wholesale prices to lower the development costs. Anytime we can see that, you know, there could be retailer fees that can range between $10,000 to $20,000 sometimes, and that can then be afforded at the end for the consumer if we can afford to buy them at wholesale. We want to create a retail channel to supply and sell the factory built homes, and in this process we've identified ADUs as a high demand because of the local ordinances, and various municipalities are now being open to higher density lots being developed at higher density, or, you know, subdivided for more density. So we're looking at ADUs as an opportunity to assist homeowners and also develop our own ADU lots. So we're also looking at the ADU financing loan products, and potentially developing a loan product that we can then turn around and provide consumers to finance these and have that as a turnkey situation within our thriving ecosystem. And then lastly, just as Chelsea mentioned earlier in her presentation, we're looking at the manufactured home replacement program. We've had some challenges. We are very strong in the region in doing owner-occupied rehab programs with municipalities, and we've seen quite a bit of distressed units in various mobile home parks, seniors primarily that have had deteriorated homes, and in, you know, single wide product that you would just never believe people live in. But we're looking at, you know, potentially partnering with, you know, financing, funding institutions that would look at creating a manufactured home replacement plan program for this region, because there isn't one right now. HCD does not have one directly specific and for us to work through at this time. That's why we're trying to create one. Next slide. So in speaking of our demonstration project with the ADU, we currently own a lot that's about 10,800 square feet. This is one of the designs that's going through our planning for the city of San Bernardino. Next slide, please. And you have a couple of options here. These are Silvercrest models that we are considering purchasing and putting down as a primary and an ADU concept. The ADU concept can range anywhere between 500 to 800 square feet. And the challenge is just trying to identify the new laws that are impacting homeowners and how they're placing their ADUs. Are they converting their garage spaces? How can we make this a viable option for future homeowners in terms of creating wealth or having their families age in place? So we're looking at various designs and features of the ADU concept along with the primary home factory built site. We're also looking at this site being a community land site, a community land trust site. We currently have one property under our community land trust, and it's about a year old. We acquired it, rehabbed it, and there's a happy homeowner on it now. And we're looking at developing this site as a future community land trust and keeping it affordable for 99 years. Next slide, please. So this project will also integrate a solar panel unit with an energy storage to evaluate energy cost savings and efficiency, and we want to test assumptions relating to the flexibility of the grid. The fact that we want to put this on a community land trust 99-year ground lease is critical in our ability to try to get more financing or funding for this project. So we're currently in the stage of raising dollars to try to use this as a demonstration project, a key demonstration project in allowing for a CLT homeowner to be able to purchase, and then we create the 99-year ground lease in conjunction with that. I do have a website that you can visit, our website that you can visit us for when you do receive the presentation in the near future. Next slide, please. So our lessons learned, of course, identifying lenders that offer MH Advantage loans has been critical to our process for our first-time home buyers. We have partnered with 2 or 3 at this time. Of course, the network of lenders, the more we have, the better. We've learned that, appraisals can be challenging with conventional lenders because of the single family comparable with the manufactured home on land comparison. We've identified city infill lots, and we're learning as we go more about the home and other private funding sources that are out there. We've become more familiar with our local government permit and development approval processes. In doing these infill lots, it helps to have had a previous footprint to offset the development impact fees, because in Southern California, these fees can range anywhere between $12,000 to $20,000, especially if these lots have not had a home on them for 20, 15 years sometimes. So it's important to learn those logistics as well. And again, building our relationships and network with local manufacturers and contractors, and of course, keeping up with the construction increases, the supply and the demand for factory-built homes. Currently, we're experiencing what Chelsea's mentioned happened last year up north in our California, and the supply for factory-built homes, the demand for factory-built homes is really high right now. So taking into consideration the time frame of ordering the units and having them delivered, and it's definitely a learning curve for all of us, but it's exciting. So And of course, as many mentioned, the misconceptions of manufactured homes and the negative stigma, we've taken that as an opportunity to educate municipalities and consumers. And we've pre-listed the second phase, and we've had over 100 inquiries. People are definitely interested in the models and the land. The fact that it's sitting on independent land is attractive to homeowners. And then, of course, the supply and demand for ADUs is a growing sector in our target regions, and we're seeing that, we are getting quite a bit of inquiries on how this ADU is part of a homeowner's dream in terms of having, in lieu of having a garage, converted into an ADU instead. This pretty much ends my presentation, but again, willing to answer any questions and answers. And thank you again, Prosperity, for the opportunity.
Awesome. Thank you so much, Jenny. We are moving into our question and answer segment. So if you have any questions, drop them into the chat or raise your hand so you can ask your question in person. In the meantime, while we wait for people to kind of drop some questions into the chat, the question that I have for Jenny and Chelsea, both of you are kind of talking about issues that definitely pertain to site-built housing, right? Chelsea, in terms of disaster recovery plans, and Jenny, quite frankly, just the production of units, right? And how to fit that into city planning and the financing of that. How challenging has it been to bring up these issues, particularly relating them to manufactured housing, when we find that in a lot of localities, they're still not addressing these issues for site-built housing?
I'll let you answer, Chelsea.
That's a good one. Well, I think really like kind of going through such a significant wildfire event has really taught us a lot about kind of the where we have gaps and needs, and then also really brought people together, both community organizations that have stepped in and have been amazing, and then local jurisdictions. And I mean, as I mentioned earlier, in Oregon and probably in a lot of other states, particularly California, we are in an affordable housing crisis, and we already had such a shortage. So I would say that, just in a situation where everyone's been thrown into, we're looking at disaster recovery, it's kind of enabled everyone, or allowed them, or forced them to be much more creative and much more open to looking at ways that we can respond, and then also look at, not just react to the current crisis and the current disaster, but what we can do more creatively looking forward, moving forward, so that we can hopefully mitigate some of this, and also address our current affordable housing needs.
Yes, definitely. So I agree with you, Chelsea. This is definitely an affordable housing crisis. I think our challenge has been educating the consumer, the public, of the factory-built product, its efficiency, there's warranty to the product, it's sustainable on land, it's a way to, have a family. We just had one home that resold for $376,000, which is going to be used as, that was 2 years ago. It was in the market for $255,000. Now it's at $376,000. So, it does tell you a little bit about how these homes have we use these as comparables, but there is the challenge of DPA, there is the challenge of additional funding for development costs, as continued construction costs seem to rise even at the factory plants. So lots of increases, and it doesn't help that the pandemic slowed everything down. And so the challenge is, communicating and creating these collaboratives that our team here, we look at seriously, trying to, share our story to have people know that this can be a reality for other developers using inclusionary zoning, methods, and the CLT model having it be more of a focus in terms of creating affordability in perpetuity.
Awesome, thank you both. Another quick question. We've heard briefly in each of the panels other models of home ownership being mentioned, like CLTs. What do you think in terms of reimagining the future of manufactured housing would we really have to begin to do in terms of partnerships to create viability for these alternative models of home ownership? And that's in terms of housing organizations partnering with other organizations, or even CDFIs partnering with housing organizations. What kind of collaborations would we need to see in the manufactured housing field to kind of bring to fruition some of these ideas to be more mainstream within the manufactured housing field?
Well, I know that in California, our governor is very pro housing, and so there's been a lot of efforts from the housing authority, county level, city level, in trying to determine what to do with these infill lots that are sitting vacant for years now. And there is, a push towards accountability of these lots being identified. And so I think working through these initiatives, legislative initiatives that were mentioned as well with Chelsea, and pushing through the ideas of a community land trust and keeping a property in, long-term perpetuity. We had to work very closely with the tax assessor's office in the county. Very rarely do they see these models, and how does this work when they're appraising these homes? And a lot of this is, again, building these long-term relationships and communication efforts with your local and, in many cases, state agencies that work with these funding sources to develop factory built, because factory built is single family housing. There is no, at least for in California, we've had no issues in terms of identifying them as single family. It's just educating the public, a lot of the times the planners as well, that, if there are existing other homes, factory built homes on land, these are just as comparable, if not better sometimes, than the older stock homes that are in these communities. So yeah, I think, and working with these financing agencies, various, if there are national agencies that are willing to fund projects like the one we're selecting to work on as a demonstration project. We are a CDFI as well, and we look to apply for these funds as well. So I think in areas of finance, housing, and legislative collaboratives, and health and housing, it's as important too, because of the quality, and you want people to have quality housing as well, even if it's considered affordable or workforce housing in the world of affordable housing.
Yeah, and I'll just quickly, I know we're running out of time, but I'll just say, OHCS has been involved in, as I mentioned, supporting manufactured housing, and we also have, for over a decade, and we also have very supportive legislators and a very supportive governor who've really recognized that manufactured housing is critical under our affordable housing goals. And so, I think having been, we're a state that has the resident-owned co-ops, and we passed legislation that are specific to those co-ops. And so we've had a lot of partners that have been working on this for over a decade, and having those partnerships, I think, is really important, and then allows us to kind of cover the basis and then start looking at how we can become more creative in addressing issues. And that's something that the Manufactured Housing Advisory Committee, which was established under the 2019 legislation, they're kind of tasked with looking at alternative models, looking at existing resources and ways to use those resources in more creative ways, such as maybe for a community land trust or something else. And so I think it's incredibly challenging, but having those partnerships established and that trust built allows us to really put our heads together and think about ways to be more creative and address this very complex housing stock.
Awesome. Thank you so much. Thank you, Jenny. Thank you, Chelsea. And also thank you to our first two speakers, Paul and Damon. We're going to begin wrapping up right now, but before we do, I will transfer it to Doug Ryan for a quick few last words.
Great, thank you, Pam. And thank you everybody for joining us today and yesterday for the Right at Home, our 2021 I'm Home virtual conference. It was great seeing many of you that I've seen for years and some of the new faces as well, and we hope you continue your work on affordable housing and manufactured housing in particular. We will all be together soon, and I look forward to that opportunity to being in person. But I want to just offer a couple thoughts as we close. Quickly, you've seen there's so many moving parts to the affordable housing crisis that have been revealed by the COVID crisis, and that predated the COVID crisis. And manufactured housing continues to be part of the solution to the pre-COVID crisis and to the crisis that was exacerbated by the pandemic, with its disparate impacts on communities of color, low and moderate income families, rural communities, and other underserved communities across the country. There's so much more to do, and we look forward to working with each of you to do that. In closing, I want to ask that all of you, when you get the recordings and the materials in the next coming days from these 4 sessions, take a chance to take a look at them again, share them with your networks and your colleagues, reach out to all of us, the speakers, as well as Prosperity Now, including my colleagues Pam, Dara, who I appreciate greatly for helping with this program, and to me with questions or ideas and follow-up. Also, in the coming months, look forward for more information from Prosperity Now and the Innovations in Manufactured Homes initiative. Well, there's a lot more to be done, and we look forward to working with you in the years ahead. So again, thank you for joining us, and more to come.
Thank you all. Have a great afternoon, and thank you for joining us today.